Welcome back, ladies and gentlemen. It is about time to give you some insight into my Canadian dividend stock portfolio. As mid this week, I think around Tuesday, I loaded the boat on a ton of Canadian banks as I've been re-preparing my portfolio to set myself up for potential real estate dealings that will be going on, and I'll be discussing this over probably the next month on my Patreon page. I'll give you guys some tidbitted advice on here of what I'm doing, but if you want that full clerical view of that more personal insight, you can join my private chat groups. You can get involved and see a lot more of the real estate deal, anything that's just more personalized on that Patreon page. The link is down below. But let's get into the portfolio itself. Let's talk about these Canadian banks I've been buying. Let's look at some other Canadian stocks that I'm likely to continue to start buying, and then I'll also offer some insight in kind of being a couple with a fiance and how we're kind of co-mingling our future retirement and what we're doing to some clerical view. Nothing crazy, because I do not like she likes to keep relatively private, and out of that respect I'm only going to show so much. But taking a look at the portfolio, guys, it's been going up, and I'm very thankful I pulled the plug and did the rebalancing just to get that $300,000 in liquid cash that is accessible at the drop of a dime when I need it. It left me with about $115,000 invested. That has been going up nicely over this last week, especially considering I bought these banks, like I said, around Tuesday. But we can see here that I'm sitting on again around $30,000 in cash. Got to keep that nice liquid emergency fund outside of everything I'm doing, just for that security blanket, most of that in high interest savings accounts. But let's just take a look and break down the portfolio itself. So I decided to weight the banks. I said if I had to pick three, it would be Royal Bank, Toronto Dominion Bank, and National Bank. But I decided that I do like Canadian Imperial. I still like Bank of Nova Scotia. I think they're, especially Bank of Nova Scotia, is a little less favorable. I've looked at like some of the internal workings with their mortgage rates. It's just, I think Bank of Nova Scotia, it's not going to be the hugest growth vector, but I can't help but recognize the value that it's at with its current, balance sheet, and just from my personal perspective of what I think is valued, because it's definitely one of the cheapest of the bunch and over 6% yield. I figured I would just do it like an index fund, upper weight the bigger banks by market cap and lower weight the three other banks, avoiding Bank of Montreal, because I just personally, in my own opinion, I'm not the biggest fan of it. So we can see that, I put about 16 or 17% just in the Canadian financial sector. Currently, that is my only Canadian exposure in my portfolio. I do still have a huge weighting in VOO of about 66,000 converted to CAD, and I do have more in my RSP that I might be not pulling all of it out, but I just want it there liquid. So if things start working out from a living circumstance, I probably will end up putting a lot more of that back into SCHD, but we'll see how that kind of unfolds over time. Currently, the yield on this has become abysmal. Again, back down to 3,400. Doing this personal life stuff definitely keeps trying to deal with a stock portfolio a lot more interesting, I gotta say. And it's crazy to see my passive income drop down to this percentage. But again, I am more growth oriented in this current environment, and I'm thankful that I've got this huge position in VOO, because it's really been taking the portfolio up during this week. And I still have private placement investments. I still own some shares in Aduro Clean Technologies and some of the small caps that do not get represented on here. Now, before we talk about my fiancés and that kind of commingling of finance, before I talk about some of these individual stocks and what's going on, maybe we should run a quick compound calculation just to show you guys the growth potential that I still have here at the age of 31 years old with 115,000 invested. And again, I'm still expecting off this probably closer to a 10% growth rate over time, but I always recommend doing this because it's going to help you better track your financial independence, because we're all trying to retire early. I want to pay for a mortgage sometime between 35 and 40, and it'd be really nice to scale up to a $500,000 portfolio in that same time frame. And let's just presume we're still putting away maybe the minimum of $500 a month, right? And keeping some extra cash to pay down the mortgage quicker. My goal is still to put away around $1,000 a month, but let's just take the bare bottoms of $500 a month. That's about $6,000 annually. And let's say my retirement age is going to be around 40, so it still gives me about 10 years, give or take. And let's say we're still able to get roughly a 10% rate of return off the market. Again, that's going to leave me with a comfortable $400,000 on my side, excluding my fiance's side. And I always recommend you do this stuff. It gives some real clerical view. And let's just say we're able to actually extend it and we're really hustling, and by the time I'm 40, I'm still putting away $1,000 a month. Again, it's really hard to kind of project that out. That could give me about $500,000 invested. And again, there's so many variables at play here. It's kind of hard to give and take with different values, especially if real estate values going up or down. I do not consider a home an investment. It's just going to save us the ridiculous fees of spending $3,000 plus a month on a rental apartment, and we can still be within relative means of our family. But taking a look, let's talk about the individual positions. The Canadian stocks I'm still interested in, and of course some of my fiance's stocks. But taking a look, Royal Bank, I'm very thankful. I picked these up between Tuesday and Wednesday. I think I did most of the buying on Wednesday, so I was able to take advantage advantage of this dip here. Royal Bank, it's been doing okay. These banks, everything, the whole markets have been coming back, so we're seeing some nice gains across the board. I think TD, if I had to pick one or the other, I think, not financial advice, TD is probably the most best bank for the bang for your buck, in my opinion. It is traded wickedly off those highs, down 30% at the lows, thanks to that falling out of First Horizons or whatever they were trying to purchase in the US, as I've mentioned time and time again. So putting about, I'm going to say, what did I end up putting? 12,000 between the two bigger banks, and then I took about another 9,000 and divvied it up between Canadian Imperial Bank, Bank of Nova Scotia, which has arguably been one of the better performers since I picked up shares. I mean, surprisingly, because I still think it's probably the most undervalued. It should be trading a bit higher than this, but I'm very thankful because I think I'm going to thank myself in a little longer, and I might even get a higher rate of return off these just for how cheaply valued they are today. Again, that's all speculative in nature. I got National Bank here, one of the best performing Canadian banks, a bit smaller as well in market cap size, and again, coming in on that Tuesday, Wednesday time frame here, picking it up, seeing some very healthy around 2% gains here as well. And again, starting with the Canadian banks like Pokemon cards, kind of got to collect them all, and you get exposure to the entire Canadian economy through these conglomerates, these monopolies. They are world renowned for a reason. They are more stable than almost any bank globally through very recessionary periods. So I figured, why not start at the top of the Canadian waiting list? And I figured, why not the banks? But I do want some diversity over time, and with any money and whatever ends up working out that I have left over, I'm looking at TELUS. I think it's good here. I'm still waiting to see. It's one of the most shorted, not the most shorted, but it's definitely a highly shorted Canadian stock because of the high interest rate environment. Utilities, telecom, they're very infrastructure heavy with debt, and they're feeling that pain, as mentioned on their last earnings, that they saw obviously their mortgage payments, their debt payments, whatever they're using to fund that infrastructure start hitting them pretty heavy. But they hit one of the best growth periods they've ever experienced to this massive growing Canadian economy. They hit like record numbers they haven't seen in a decade. So they're kind of getting this kind of tale of two stories going on right now, and I'm curious to see what happens on the next earnings, but I am looking to buy this one. I do like Canadian National Railway. I think you're never going to go wrong with this, and comparable to the other railway stock, it's a lot better of a growth business. They're doing a lot more investments, but if you're looking for dividend income and dividend growth, Canadian National Railway is more fixated on the dividend side of it. Again, it's only around 2%, but it's a great growth driver for a Canadian portfolio, in my opinion. And then I'm also looking at Fortis Hydro One. I think these ones are a little bit more stabilizing, like the BMO low volatility ETF here in Canada that I mentioned in my prior videos. I think getting some of the Canadian utility exposure would be great. So these are currently on my watch list to potentially buy, hopefully sometime in the coming months. And then finally here, I want to talk a little bit about my fiance's portfolio, and a lot of this has to do with tech stocks. Outside of me still believing that there is a bubble going on in the AI industry, and if you're looking at AI stocks, I'd look for ones that haven't ran ridiculously, because right now I still think when you're looking at things, say like NVIDIA, if you're looking at things like Palantir, I just think these things are trading at much higher multiples for this year. Again, this is very dependent on what those earnings look like coming into the next quarter. I feel as though the brick wall will be defined on these next earnings. If tech goes higher, or go lower, it'll define where the market goes. And if I had to make a bet, again, speculative in nature, I'm not investing off this advice. I'm just saying that I think we're going to see a bit of a cooling period unless there's some surprise growth that many of us weren't expecting, which is always a possibility. But tech stocks have been rallying incredibly. Apple is sitting at an all-time high yet again, and I'm very grateful that my fiance is very level-headed in the volatile market, and she has stayed true to her tech companies, which are some of the larger weightings in her portfolio with Apple. So she has been riding these waves, and same with Microsoft, that's about to hit all-time highs here. She did a great job holding through this volatile period, and she's starting to see the benefit. Meta, I think, is one of her probably best stocks, because she picked it up at an average of like 170 a share down in the pandemic levels, and now she rode the wave, and she's starting to see some pretty wicked gains off this. A lot of things that are going to be going on in the next little bit is I'm going to have to do some readjusting in both our portfolios, because we are utilizing some of our tax advantaged accounts to keep some tax-free income liquidable. I'm not touching my corporation. We're trying not to touch too much outside of the tax zone, because a lot of this just comes into the tax considerations. If you hold individual stocks and regular brokerage accounts and you're green on them, well, why sell them if you're going to be taxed when you have access to tax-free income in TFSAs, RSPs, some other access around? And again, I'm not going to get too in depth, but maybe at some point, if I can convince her, we'll sit down in the future and do a couples finance session and just talk about the struggles, the realities of us bringing our portfolios together, and projecting out our future retirements. Because again, this is a thing that I believe, like Dave Ramsey, when he ended up getting married, it's not a we thing anymore, it's an us thing. And I know there's a lot of YouTubers I really respect, like Rebecca from, I think, Quest to Fire. I'll leave a link to her channel down below. She has been dealing with her, I think she's married now, and her husband lives abroad, and they're trying to figure out how that works, and it's a bit of an ordeal for sure, but I think it's something that YouTube is lacking in, to say the least, and might be a very fun conversation down the road. But at this point, I'll pass that question off to you. I'd love to know what you guys think in that comment section below.